2022 is shaping up to be another year of strong growth for the property sector. We expect GDP to grow by 3.5% to 4.5%, unemployment to fall by 0.5%, and companies to take advantage of strong top-line growth by hiring and upgrading office space requirements. Yes, there will be bumps caused by the pandemic, rising inflation, and elections, but we view these as opportunities for clients wishing to take advantage of strong underlying trends. Hello, I'm Samir Chopra, Head of Pacific Research at CBRE, and this is our Market Outlook. In this video, I'll touch on 4 themes impacting the real estate sector in the year ahead: immigration, capital flows, residential prices, and commercial rent growth. Firstly, immigration. Australia's focus on returning citizens and skilled migrants will be one of the main drivers of the speed of recovery in the real estate sector. An inflow of 490,000 migrants by 2024 could set the scene for an incremental 900,000 square meters of office space, 200,000 dwellings and 2.2 million square meters of industrial space, and 6.7 billion of retail spend. Secondly, capital flows. We expect investment volumes will be circa 10% higher for this year. Foreign investment reached a record high in 2021, and border reopening should spur further interest. There's also scope for an incremental 68 billion of inflows by 2024 from domestic super funds if asset allocation to property returns to its historical level of just over 8%. The numbers could be even bigger if funds chase the inflation hedge offered by real estate. These flows, in turn, are likely to support further but modest yield compression this year. And because of this, it'll pay to be more selective in the year ahead. We see good opportunities in prime Sydney and Adelaide CBD office, Melbourne and Perth industrial, and across the regional retail spectrum. Thirdly, if you cast your eyes to residential, prices should increase by 5 to 10%, with Brisbane best positioned to achieve double-digit price growth potential. Australia has an undersupply issue. We'll watch what happens in New Zealand with rising rates. Positive rent and price trends for units could see a doubling of Australia's announced built-to-rent pipeline to around 20,000 apartments. And then finally, moving to commercial rent growth, industrial rents in the Pacific have finally started to be more reflective of the very favorable demand conditions. We see this accelerating through the year with mid-single-digit growth and maybe even higher possible. And on the office front, we're expecting low single-digit net rent growth, helped by, we expect incentives to peak around middle of the year, and this rise comes on the back of declining sublease vacancies throughout the course of 2021, and then sort of growing space requirements for government and smaller businesses. So in summary, the outlook for real estate is positive, with migration and fund flows being key themes, in addition to corporate earnings and ESG. We look forward to working with you this year to provide additional property market insights which help shape your decision making.